If you want to make money in 2019, this is the video for you because I'm about to tell you what to sell, what to buy, and what to do. And this is, of course, all in response to the fact that trade talks between, yes, Donald Trump and China have virtually fallen apart, leading JP Morgan Chase to increase their recession probability within the next 12 months to 40%. Folks, this is an emergency Meet Kevin report where I report news that makes you money. Now, there are 4 types of investments that you should absolutely consider selling at this point, but before you do anything, keep in mind you are taking advice from somebody making a YouTube video. I also happen to have my face on a coffee mug with a plastic straw and cold coffee, and I sell Don't Sue Me Bro shirts. So remember, this is for entertainment purposes only, and hashtag Don't Sue Me Bro. But first, the very first thing you should consider getting out of or not holding much of right now are multinational corporations. These are going to be companies like Apple, Tesla, microchip manufacturers, Nvidia. Any of these companies selling to a bunch of different countries are probably going to, and they've already been getting slapped because of this trade war. And this also extends pretty weirdly to companies like Best Buy, who source a lot of their product from China, and even companies like Wynn Casinos and Resorts, who focus heavily on sort of the Chinese demographic. Now think about this practically. A lot of Apple products are put together in China. Tesla wants to have 30% of its vehicle production done in China, especially once they open their Gigafactory 3. And folks, the trade war is not going to help any of these companies. Second thing not to invest in right now, in my opinion, any kind of foreign index funds. Look, I know buy and hold is great. I know the conventional wisdom is buy your index funds, diversify into multiple different index funds so you're protected. And look, I'm a big fan of Wealthfront. In fact, I've got their app, I have money in their investment account, but I have to say, I'm a little frustrated right now because the Wealthfront robo-advised index fund has a 51% exposure to foreign markets and developing markets. And the last thing I want my money invested in right now is in anything that's exposed to global risks while a trade war is going on and a global slowdown is going on. So foreign, no thank you right now. I'm gonna be taking that money and investing it instead into solely United States-based things. Now, that could be bad. I'm not diversifying enough. I get it. That's just where my mindset is right now, and I encourage you to think about that as well, because as we know, the United States is pushing strong right now in terms of its economy relative to everybody else. Doesn't mean we're having a field day. It's just doing a whole lot better than everybody else, okay? Think of it like the best of the worst. Now, just a heads up, in my opinion, this also affects the S&P 500 heavily, because what are the biggest companies in the S&P 500? Well, your multinationals. Now, the third thing that seems to be getting hammered right now are agricultural stocks that trade sort of on the global marketplace. We'll talk about some other positives in a moment, but ag stocks are getting hit, especially since China is now reneging on their agreement to buy more agricultural products from the United States, obviously because Trump slapped them with more taxes. And the fourth thing getting hammered right now are any kind of energy index funds or sectors. I'm not exactly sure why, but I'm just seeing it get hammered. Great, now we know what to look out for in terms of possibly what not to invest in. The multinational corporations, the index funds for foreign or developing markets, ag and energy stocks and indices. So be careful. Again, not saying you can't go have a field day trading you guys, but just stay vigilant, okay? Now, I hate to sound jaded, but in my opinion, this is probably good information for you to keep in the back of your mind. Even if at this point, Trump and China hammer out some kind of trade agreement, keep in mind that actually both sides following up on that agreement is probably going to lead to a little bit of a rocky and intense road for the next few years. So best case scenario, this trade conflict just resolves. Worst case scenario, it keeps falling apart. And middle case scenario, we strike a deal, but it's kind of hard to enforce, or, you know, everybody's kind of starting to cut corners, which in my opinion, really makes me think that the 4 things I just said not to invest in are things that I'm not going to be excited about anytime, at least in the next few years, unless some things really change big time. I think we've got growth left to milk in the United States, and I think that is what we should be milking. And so that's why I'm going to recommend the following investments. Now, in times of uncertainty, probably the best thing to invest in would be a zero-fee Fidelity Index Fund for bonds. Bonds are probably going to see the best returns anytime there is a conflict like this. They're certainly going to spike as they usually do. That tends to be a more safe sort of investment. I'm not a big fan of bonds personally because to me, I prefer different investments, but they tend to be relatively safe. Now, I'm going to give an honorable mention here before I go on to my next two favorite investments right now. Honorable mention is obviously going to go out to gold and silver and precious metals, although I'm not a big fan of gold and silver or precious metals, mostly because you can't depreciate them. They're not productive assets. That is, you can't really do anything with them. Overall, I'm just siding with Warren Buffett that, you know what, I'd rather have something that worst case scenario, I could turn around and do something with. For example, if I own a car, at least I can turn around and rent it out to Uber for Uber taxi. But if I own a bar of gold, I could look at it, you know, I could kiss it, but I can't really do anything with it. Unless I want to melt it into stuff to like wear, but then that's also not really productive, right? Now, aside from bonds, my next favorite investment for low risk, and I know this might sound crazy, but it's real estate. And the reason I say it might sound crazy is because I'm sure a lot of us think back to the last financial crisis, which I read about every single day. This is like the hardest book of my life to get through, but I read it every single day and I learn more and more about the last financial crisis. And now the biggest things that really keep coming out of this book are just the fact that most of the people who got hurt hard in real estate had crappy loans. They got teaser interest rates that blew up their monthly payment after 6 months to a year, forcing them into refinancing. And of course, when that didn't work, foreclosure. Bad variable rate loans, ninja loans, no doc loans. This is terrible crap. So in my opinion, the best way to prevent this kind of global risk right now is by securing 30-year fixed rate financing on property, whether they're apartment buildings, duplexes, triplexes, single family houses, condos, doesn't matter, in high quality areas. How do you know if an area is a high quality area? If the population's going up, it's probably a desirable area. And you can easily find this. Just Google the county that you live in, followed by the word population, and you'll know if you're on the up and up or if you're on the down. But one of my favorite explanations for why I love real estate so much is because no matter what happens in the short term, if I can lock in 30-year financing in a safe way where I know the tenants can pay it all off for me. I know I can afford it. If I'm gonna live in there, I can get 30-year fixed rate debt and I know I can make the payment. That's good. If rates go down, I know I can refinance and get a lower rate. If rates go up, I'm good. I'm locked into a 30-year loan. There's no chance the bank calls me up and says, hey, trade war, problems with Trump, we're gonna have to ask you to pay off your house. That doesn't work. It's not gonna happen. As long as you make the payment, as long as your tenants are paying, you're good. So real estate to me is a really, really nice hedge, especially if you can get wedge deals or below market deals. Now, there are people on the internet that say that our money is going to experience hyperinflation during the next market crash and that the only thing you should buy is gold because the paper is going to be worthless. Kind of like back to Germany where people were burning the Deutsche Mark because the money was worth less than firewood. Yeah, there are people talking that kind of stuff, which in my opinion, if that happens, I still think real estate is an excellent investment because it doesn't matter what I'm going to be getting paid rent in, people still need a place to live. And if they want to pay me in bread or Bitcoin, I'm still going to have a productive asset that, in my opinion, is still going to give me an equal value on my investment. That's just why I love real estate. People need a place to live. Now, before I tell you my third favorite thing to invest in right now, do also check out the link below for the real estate investing course. I'll be going live today in our private live streams, just like I do twice a week, helping you analyze your real estate deals and filling in the gaps of the over 350 lectures teaching you how to invest in real estate. Now, the third thing to invest in these crazy times, in my opinion, US-based stocks. Now, I legitimately mean US companies, ones that are operating in the United States and are selling in the United States. Here's a good one. Tyson Meat. Stock's going up despite all this uncertainty. That also brings up the topic of Beyond Meat. Now, I haven't done a lot of research onto Beyond Meat. I probably should. Leave me a comment down below if you want me to research Beyond Meat and talk about it, but that might be another good one because they are a Los Angeles-based company selling heavily within the United States, because arguably sustainable foods are going to sell the best in the United States anyway, at least for the time being, as I don't think the rest of the world cares as much as the United States does about that. Now, this is also going to open the door to investing into building companies that produce wood in America, like Idaho-based wood companies or Home Depot, Lowe's. Companies like this could be good, although we did just see a lot of layoffs at Lowe's. Again, just things to research. Oh, and I forgot to mention, in case you want to meet me in person, make sure to check out the link below for my events coming up in Seattle, Austin, San Francisco, and Miami. Now, let's talk about step 3, things that you should really be focused on doing right now. We've talked about what not to invest in. We've talked about the things that are good to invest in times like this. Now let's talk about things that you should be doing right now. So with things the way they are right now, what should you really be focused on doing? Well, by far, and this should go without saying, the number one thing you should be doing is, if you have debt, pay it off. Why do I say pay off debt? Because I want you to be ready. I want you to be ready to strike on good deals. I don't care if you're buying Beyond Meat. I don't care if you're buying UGAS. I don't care if you're buying real estate or gold and silver. I respect everybody's opinion. But the best thing to do right before a crash is pay off debt, so that you have money you could use to go shopping when it's time to go shopping. And anytime I see red days in the marketplace, I consider it a sale day. That's kind of like this green suit. I got it when it was red. It was on sale. Okay, bad jokes. The next thing you should really do, if you have not yet, is please freeze your credit. I know this might sound really redundant to a lot of you, but seriously, if you do not have your credit frozen, you are asking to have your identity stolen. And don't kid yourself, your identity is out there. If Experian and Equifax can get hacked, your name, your social, and your date of birth are floating around in the universe, and it's just a matter of time before you get your identity stolen. And identity insurance and monitoring is going to be great when the problem's already happened and your identity is stolen. You have to deal with all that crap. But I personally am a fan of prevention, so I like freezing my credit so that I can prevent that from happening. Now, once I have my debt balances down, my credit's frozen, the next thing that I'd be focusing on doing right now is educating myself on absolutely anything that I could learn about making more money and investing to make more money. I think you're better off just literally throwing your money into a high yield savings account, be it Betterment or Wealthfront right now, and getting educated. So do whatever you need to do to get educated, because when the market hits bottom, if it's going to crash anytime soon, which I still don't think the United States market is going to see any kind of crazy bottom, at least not for the next 4 years, I highly recommend spend the next 4 years, get educated like crazy, so that way you can set yourself up to go shopping like crazy when everything's red. For real. Now, folks, as always, feel free to follow me on Instagram at MeetKevin. You're welcome to send me a DM there. I try my best to get back to everybody that Instagram DMs me. I am very slow on Instagram, though, so if you need me ASAP, link below. If you get into the real estate investing course or the real estate agent course, you're pretty much guaranteed to get an answer from me twice a week in our private live streams or in our Discord channel, where I do my best to respond to absolutely everybody's question for me. Thanks so much for watching, and until next time.